even if something has happened, which could be the mechanical failure. Anyways, that is not something which is a part and parcel of the motor insurance policies.
For weeks now, India's E20 fuel rollout has triggered a heated debate. The government says the fuel is safe. Automakers say they have found no evidence of widespread damage. Insurance companies say your motor insurance policy remains valid. So, is the case closed? Well, not exactly. Because there's one question nobody seems to be answering clearly. If E20 fuel eventually damages your vehicle, who pays for the repairs? The insurance company, the manufacturer, or you? Today we are trying to find out the answer to this question. And to help us answer that, we'll be speaking to Satish Balesgol, who's the Executive Vice President at Lockton India. But before we hear from him, let's understand why this issue has become so confusing. Well, the controversy exploded after claims began circulating online that insurance companies could reject claims if E20 fuel caused vehicle damage. The government called those claims false. The PIB issued a clarification. ICICI Lombard also clarified that using E20 fuel does not invalidate motor insurance policies. So if you use E20, your insurance remains active. That's not in dispute. But that's also not the same thing as saying every E20 related damage claim will be paid. And that's where things get interesting. Let's assume something happens after years of using E20 fuel. Not an accident or a theft or a flood, but gradual damage. Maybe fuel lines deteriorate, maybe seals, rubber components or gasket wear out faster. Maybe a fuel pump fails. Maybe there is a corrosion inside the fuel delivery system. Would insurance cover that? Because motor insurance is generally designed to cover sudden accidental events, not normal wear and tear. And that distinction could become crucial. That brings me to the first question. Does a standard comprehensive policy, including a zero depreciation or bumper-to-bumper cover, protect consumers if a policy-driven fuel change eventually results in vehicle damage?
So first, let me just clarify. Zero depreciation or a bumper-to-bumper. This is an additional cover. This is not a standard cover. But lately now, everyone has understood the importance of having a complete coverages. People have started going for a zero depreciation, which someone also called it as a bumper-to-bumper policy. So, if I talk about a motor insurance, whether the add-on is there or it's a standard policy, any kind of a damages which is arising from a gradual wear and tear or a mechanical breakdown, these are standard exclusion, whether you specifically offer any other covers or not. These are standard exclusions. So when we are saying that zero depreciation cover, it means that if the customer has opted for this particular cover, it primarily waives the depreciation on the replaced parts. If there is an accident and if the accident is covered under the policy, then whatever is the depreciation, that get waived off. So zero depreciation or a bumper-to-bumper policy do not have any connection with E20.
Now suppose the concern isn't the engine itself. Let's say certain components age faster because of higher ethanol content. Things like rubber hoses, seals, gasket or fuel lines. These are often classified as consumable components. And that's important because many insurance policies treat consumables differently. Some add-on cover exists for specific consumables. But would they apply in a situation like this?
These are all wear and tear items. Irrespective whether E20 is there or 100% petrol is there. It has no connections with the insurance coverages. Because anyways, these are being considered as a damages due to wear and tear or a mechanical breakdown. These are standard exclusions under the policy.
Now the bigger industry question. India's fuel policy continues to evolve. Higher ethanol blends, flex fuel vehicles, alternate fuels, biofuel expansion. All of this raises a broader question. Are insurance products keeping pace with these changes? Because if fuel technologies evolve, risk profiles may evolve too. And when risk changes, insurance products should change as well.
It is something which I foresee. There are possibilities that the insurance company may come up with a cover which gives a kind of an all-risk cover. So anything and everything happens to your vehicle, whether it is due to an accidental or due to a mechanical breakdown. That is something which I foresee, because see, from a customer point of view, customer always believe that if I have an insurance, it's a complete protection for me. So now there is a need of the hour where the insurance company should also come up with such kind of a cover which gives a complete protection. If you see, day before yesterday, Maruti has already made a statement that this will not be having any impact to their vehicles. They have already tested the vehicle. They have already done some kind of a calibration to the vehicle, and there will not be any impact to it. Mahindra has also made a statement. So somewhere I feel that as a consumer, you don't need to worry about it, because the OEM is also taking the responsibility to ensure that there would not be any such kind of a situations. But still, if you wanted to have protections, better to have a complete protection like zero depreciation, consumables, engine protection cover, battery protections cover, roadside assistance, because that is very important.
Now, let's separate facts from speculation. Fact number 1. Using E20 fuel does not automatically invalidate your insurance policy. Fact number 2. Using E20 fuel does not automatically void your manufacturer's warranty according to government and industry statements. Fact number 3. There is currently no publicly established framework specifically designed around E20 related vehicle damage claims. The bigger issue here is ultimately about accountability. The government says E20 is safe, automakers say E20 is safe. If both are correct, then insurance claims related to E20 damage may never become a major issue. But if disputes emerge years later, consumers will want clear answers. And today, many believe those answers are still missing.